natural gas prices are sharply higher today, alongside gains in most commodities, following the announcement of a new wave of U.S. tariffs over the weekend and traders' reaction to wildfires in the Canadian province of Alberta. However, the rally in gas is also being supported by weekend weather models, which have shifted hotter for mid-June. Analysts noted that natural gas prices also found support from a 5% rise in U.S. oil futures after OPEC decided to leave its production increase unchanged. Meanwhile, analysts estimate that gas storage levels, already about 4% above the 5-year average, increased more than usual for a 7th straight week through May 30th. Despite a 3% gain in gas futures last week, speculators reduced their net long positions in futures and options on the New York Mercantile and Intercontinental exchanges for the second consecutive week, bringing them to their lowest level since December 2024. In terms of supply, average natural gas output in the lower 48 states has declined to 104 billion cubic feet per day so far in June, down from 105.1 billion in May and a record 105.8 billion in April. However, early month production data is often subject to revisions. Traders attributed much of the recent production decline to routine spring maintenance on gas pipelines. Such maintenance typically occurs in spring and fall, when heating and cooling demand is relatively low. Some analysts also pointed to reduced investment in oil drilling, driven by a 12% drop in oil prices this year. Since roughly 37% of U.S. gas output comes from associated gas, a byproduct of oil drilling, this decline in drilling activity has also weighed on gas production. On the demand side, meteorologists forecast that weather across the lower 48 will remain mostly warmer than normal through June 17. As a result, average gas demand, including exports, is projected to rise from 97.4 billion cubic feet per day this week to 99.9 next week. At the same time, gas flows to the 8 major U.S. LNG export terminals have dropped to 14.1 BCF per day so far in June, down from 15 in May and a record 16 billion in April. This decline is mainly due to seasonal maintenance, including approximately 3 weeks of planned work at Cheniere Energy's Sabine Pass terminal. Since May 31, gas flows to Sabine Pass have held at a 23-month low of around 3.1 BCF per day, compared to a prior 7-day average of 4.3 billion. The bulls made a comeback on Monday as natural gas surged to a high of $3.75, signaling a bullish reversal. After setting a daily low at $3.50 and holding that support on a successful retest, prices rebounded sharply and reclaimed the $3.75 level, which had served as key resistance 2 weeks earlier. If natural gas stays above the $3.67 level, it will move towards the next resistance level at $3.83. However, this rebound is likely to be short-lived, as the natural gas storage surplus relative to the 5-year average is expected to keep growing during the 4-week period from May 24 to June 20. Please like, subscribe, and comment to support the channel. See you in the next one.